Hey guys, OPSEC here, and today we're going to begin into the market making series. So, in this series we're going to be going into what is passive and active order flow, how does it shape the markets, how does retail's participation in it affect it, how do larger entities take advantage of it, and how does knowing this and understanding this benefit us. So I will begin by saying, if you have not watched the first episodes of the How to Trade series, you're not going to understand this. This is a more in-depth and complex concept and topic that we're going to be getting into. And right now I'm just stacking blocks on top of blocks on top of blocks of logic. So I'm essentially teaching you guys all of the logics and fundamentals of how these markets move and operate, all of their mechanics. And then we're going to get into the charts a bit more. Now, the reason we're doing this is because you cannot understand what you see on the charts before you understand what is behind it. You can't fix a computer if you don't understand how the computer works. You know what I mean? So you gotta understand how to think like a market maker, like a person with a lot of money, like the smart money, if you will. Okay? The only way to understand how smart money thinks, that is large banks, large institutions, and all that, is to understand the mechanics of the market. Because if you understand the mechanics of the markets, then you understand that it's not that simple for banks and institutions to get into longs or get into shorts. They really have to plan it out. And once you understand how they plan it out, you can profit off of it. So this is how it benefits us. Okay? So if you have not watched the first episodes, I do not recommend you continue. Stop the video right over here and then go back, watch the first episodes. If you have watched the first episodes, then before we get into the video, go ahead and drop a like, subscribe, join my Telegram, and follow me on Twitter. Okay, let's get into it. So, order flow. So, we're going to start with order flow. What is passive and active order flow? So as you can see, this is a screenshot I took from my exchange. This is BingX. If you want to sign up on this exchange, the link is going to be in the description. If you just sign up with my link, then instead of giving 100% of the fees to BingX, half of them will go to me. So simple as that. Okay. So anyways, the order book. So what you can see over here is the order book, and that represents the passive order flow. Okay. This is the higher portion of this screenshot. Down here you can see trades. Okay, that is active order flow. What is passive and active order flow? This is the difference between them, is that this is limit orders, and these are limit orders that got paired with market orders. What is limit orders? Limit orders are pretty much people who know where they want to buy and how much they want to buy or sell, right? So they know where they want to execute their trade and they enter a limit. Okay, a limit is like saying, I want to sell 100 Bitcoins at 23K. You set that limit and then it will pair you with the first buyer over there. Okay, so those are limit orders. Okay, and you can see them over here, right? So the guys over here at the top here, they want to exchange longs. They have longs and they want to get rid of them. They want to sell pretty much. Okay, so they want to sell their longs. Okay, so the guys up here, they want to exchange their longs. The guys down here, they want to exchange their shorts. What does this mean? This means that if you want to open a long, then you have to go to the guys who have the longs, and that's those guys up here. Okay, so if you want to buy a long, let's just say price is currently at 22,750. And let's just say, imagine that the number over here is 23K. Okay. If you want to buy a long and you click on market buy, you're like, okay, I want to buy a long right now. Give me the best price possible, but I want it right now. Then it's going to pair you with the first guy and that's going to be at 23K. Okay. So obviously it's a made up number. Over here you can see 22,747.5, but hypothetically, okay? And then vice versa if you want to sell short. So right, if you want to sell short and the nearest buyer is at 22K, the nearest limit order that was set to buy or pretty much exchange a short is at 22K, and the current price is at 22,750. If you want to enter a short, then it's going to fill you in at 22K. This is why sometimes when you enter a trade with a market order, you're going to see that you get filled a bit under or a bit above. So if you like enter a long, like, or a buy, sometimes you will see it fills you slightly above the price you expected to enter at. The reason for that is because your exchange lacked liquidity at that place, so it had to fill you in with the nearest seller. And then vice versa if you want to sell short, okay? So if you click short, then oftentimes it's going to fill you under it, which results in your trade starting in a loss, okay? So if you sell short, and it's most likely going to pair with somebody a bit under and not at the price. And when it does that, that pretty much means that you're going to start your position with a loss, and that's called spread, okay? Because there was no liquidity where price was at that time. The liquidity is this order book, okay? So let's quickly recap this, okay? So a market order just means I want to buy this much. I don't know where, but just give me the best price, okay? That's a market order. You just know what's the volume you want to enter. A limit order is you know exactly how much you want and you know the exact place you want. And by doing so, you're providing liquidity to the books, okay? The limit orders show up on the order book, okay? And once paired with a market order, so let's just say there's a limit at 22,747.5 and I now market buy and it pairs me over here. Then let's just say I bought 5 Bitcoins at, I just clicked market buy 5 Bitcoins. Now it's going to show up down here at the active order flow. This is trades, you see. It's going to show up 22,747.5, amount 5 Bitcoins. That's me buying, okay? Because me buying pretty much filled a sell limit. You see where I'm going with this? Me buying filled this guy's sell limit, okay? So he wanted to exchange a long. He wanted to get rid of a long, and I wanted that long. So I got filled over here. He sold to me, okay? So this is the active order flow. Active order flow is pretty much when passive order flow meets a market order. And when the two meet, they have a baby, and that baby is called active order flow, okay? So when a market order meets passive order flow or a limit order, and they have a baby together, then that becomes, that the baby's name is active, and then his middle name is O, and then his family name is flow. So active O flow. Anyways, let's give you a real life example. Let's just say there's a marketplace, and in this marketplace, they sell a variety of things. Among them, they sell apples, okay? The apples are going to be listed where? On the shelves, not on the order book, on the shelves, okay? The shelves are the order book, pretty much. So what you see on your exchange as the order book, the passive order flow, is the shelves in the marketplace, okay? Now, if I want to sell apples, what I'm going to do is I'm going to go ahead and list them on the shelves and tell you, okay, I want to sell them at this price. That is me setting limit orders because I know what I want to sell, I know how much of it I want to sell, and I know what price I want to sell it at. Okay? Once I set those apples up for sale, any one person can come and buy, and let's just say I set these apples up for sale at $100. Does this mean that the price of apples is actually $100? It does not. There could be apples on the market for cheaper. And what dictates whether the price is actually worth that is if somebody within that marketplace participated in buying at that price. So if I set an apple up for sale for $100 and then somebody clicked market buy, so he went ahead and he wanted to find the apple at the lowest price, and he found my apple at $100 and he bought it, then now the price of an apple within that marketplace is officially $100. Why? Because I offered to sell at $100 and the market accepted it. Okay? That's why the price is called, that's why the price for an apple within that marketplace is going to be $100. So within that Apple marketplace, these are going to be the shelves, okay? And this is going to be what's executed. So there may be a lot of orders at really high prices over here. That does not dictate the price though, okay? Price is dictated by the active order flow. Active order flow dictates the price. Passive order flow shapes how price moves. I can shape that price. I can make price move like Nike. Like the Nike logo. If I set limits in the shape of the Nike logo, and then I decide to buy and sell for myself to make price formulate that Nike logo, I can do that. If I wanted to formulate a Head and Shoulders fucking logo, I can just set limits at certain places, and that will shape how the market will move. And how do I move the markets by doing so? I can just buy and sell for myself. This is something about the markets that many don't know. You can buy and sell from yourself. This is what institutions do. But wait, how do they buy and sell from themselves? Like how do they know that the orders are just not going to get swallowed or whatever? Well, this is why they have what's called the interbank exchange. The interbank exchange is an exchange where banks fucking trade between one another. Okay, so they buy and sell from one another. And this is the most bullshit shit ever because it's an exchange within the marketplace. So it does dictate price, right? It's like the biggest scam ever. Now the interbank exchange, what they'll do is they'll have their own order book where they'll set their own limits and they'll buy and sell from themselves to move price. Now, obviously that gets connected with the entire liquidity of the entire marketplace. So they do have to buy out retail liquidity as well. But they know that when they set a sell limit, that they're going to be the ones buying it and not other retail traders. So if they buy and sell from themselves, they're effectively doing nothing except for moving price. Anyways, that's a bit more complex. I kind of went on a rant, but so this is going to be the first episode of the market making series. I just wanted to familiarize you guys with what the order books mean. So this would be the passive order flow. This would be the active order flow. Active order flow is created when active order flow, when a market order meets the passive order flow, and then it's executed, and that is the active order flow. Active order flow is pretty much the executions. The real life example is, let's just say there's a marketplace with apples. The apples are going to be listed on the shelves. And then anyone can come and buy or sell. And the price, the actual value of an apple is dictated by those who come and buy. Those who put up the apples for sale, they can put whatever price they want. But at the end of the day, it doesn't matter. They can be delusional. They can say one apple we want to sell for $1 million. Will somebody buy it? Probably not. If you set an apple up for sale for $1 million, it's probably not going to get bought. But if you did manage to sell an apple for $1 million, then that apple is worth $1 million. But it's most likely that if you set an apple for sale for $1 million, nobody's going to buy it. That's why they have to cater the limits to the retail to the people who are going to come and buy. Okay? And that is pretty much also the exchange price. The exchange price is where people are willing to buy and people are willing to sell. Okay? So, okay, I hope you guys understood everything here. If there's anything you think I could have done better, drop it in the comments. Don't forget to leave a like, subscribe, join my Telegram, follow me on Twitter, and sign up on BingX with my code. It's going to be in the description. Peace.